The rupee has shut shop third day on a declining side. To know more about the currencies, let's go across to Samiran Chakrabarti. He's Regional Head Research India, Standard Chartered Bank, and he joins us in Mumbai. Samiran, hi, welcome to the show. How have you read into the Indian rupee? Very, very volatile, and the percentage move on a daily basis is quite a given now.
Yes, it's an extremely volatile currency and driven by both global and domestic factors. So I think the up move or the appreciation move was primarily driven by hope from the FM delivering on something. And now as the global risk on sentiment is turning more towards risk off, the rupee is getting impacted by that, as well as the fact that investors are getting worried that the FII debt auctions did not go that well. So that's also casting a shadow on rupee, and that's probably driving this depreciation phase at this point of time.
Samiran, there's a Stancy report on my inbox today which says that there has been a change in the weightage of the Indian rupee, and you're looking at 56 now for this quarter. What has led to this change in ratings for the rupee?
Two things. Primarily, one is that in terms of the oil price forecast that we are having of more than $120 per barrel for the second half of the year, we have now revised it down to less than $110. So that change in oil price forecast have material consequences for our BOP forecast, and as well as this limit increases for the FIIs would, in our view, also bring in about $10 to $15 billion extra. So altogether, BOP, which we were thinking would be negative for the full year, we now think it's likely to be positive for FY13. And in that scenario, there was reason for us to be slightly more bullish in the near term as markets slowly grasps this news. Having said that, this report also says that we don't see any compelling reasons to become overweight on rupee as yet. We can turn overweight on rupee if whatever is promised by the FM is followed by actual actions. So that could be the turning point for us being overweight. For the time being, we are on neutral.
So Samiran, putting all of that in light, what's the range that you're working with for the rest of this quarter now?
So it's possible that the target for the quarter end that we have set at 56 could be breached, and then rupee could go towards its YTD highs of 57.30, 57.40. But we don't think that there is a material chance of that high being breached in this move. And that finally it will veer down more towards the 56 range. If we look at our annual forecast range, that's pretty narrow because at this point of time we see risks on both sides coming from lower oil prices and on the other side from worsening macro. So it's kind of a tug of war, and between that, rupee is going to be kind of sandwiched in a relatively narrow range in our forecast.
Samiran, what has been your reading on all the policy changes that we saw coming in from China, Bank of England and ECB as well yesterday? There has been this talk about a Fed easing as well, and of course you have the jobs data coming in today as well. What's your reading into the global markets now?
One thing is becoming clear that every risk-on rally is getting shorter and shorter. The market seems to be asking the fundamental question that the fundamental issues are not getting addressed. We are just kicking the can down the road every time, and it seems that the market is not satisfied with that. So our sense is that the ECB rate cut, particularly the cut on the deposit rate, could actually mean that European banks who were parking more than 700 billion euros with ECB might bring that money out and put it in some other place where the returns are relatively higher, and that would mean further pressure on euro. We are particularly looking at euro going down to our Q3 end target of 1.18, and at the same time, some of the other crosses, particularly Euro-Aussie, Euro-Kiwi crosses, are now almost at their lifetime highs. And if today's job data is positive, we are expecting about 130K number, and market is about 100K. If there is a surprise in that jobs data, then we think that Euro Aussie or Euro Kiwi would be a very good play to get advantage of that.
Vijay, getting you in the conversation as well, what's your sense for the very near term, though, for the next week? How would you want to trade a euro or a rupee now?
Where the rupee is concerned, Manisha, I think it's unlikely to go towards the 56 level, or probably even sink lower than that. 54 to 54 and a quarter is what I would see as a ceiling for any kind of appreciation in the coming 3 to 5 trading sessions. If the dollar falls below 54 levels, I would be happy to buy it, expecting a pullback by at least 2%. So that is the kind of threshold that I'm looking at. And beyond 56 and a quarter, I think the rupee might just get overextended onto the weaker side. So the range is roughly about 2 rupees to 2.25 rupees here in the US dollar.